It's time for another stock review. This time it's Nikola, ticker symbol NKLA. In this next 15 minutes or so, we're going to go deep dive into the company to help you decide whether you should invest in Nikola. You're going to see a full back test comparing Nikola to the S&P. Look at the balance sheet, look at its debt position using the most advanced algorithmic systems to provide you with this information. I'm also going to share with you the link at the end should you wish to use the software that I use, one of many, but this is the best way for me to present the whole company to you. We're going to look at the intrinsic value, but we're going to go deeper into that. You shouldn't just buy a stock because it looks cheap. Is it cheap? We're going to look at the fundamentals, the news around it, the current price. We're going to cover the earnings of the stock. Much information is going to be given to you during this video. So we're going to start off very basic and then we're going to get deep. Just to give you a little preview of what you're going to see, we're going to share with you the company website. Have a look at this. It's very important to take a look at the company website. We're going to go and look at who is buying the stock, just to give you a little flavor there. We're going to go into the valuation of the stock. Let me just share with you how I brought this all together for you. Right here, you can see the balance sheet, the news, the efficiency of the company, and so on. We're going to give you the profitability score to give you a good outlook there. We're going to cover all of that. We're going to give a back test as well. So let me just give you a little preview of what the back test will look like. This is comparing to the S&P. All of this is going to be covered in detail over the next few minutes or so. It's a very detailed video. I hope you'll find it useful. Okay, so before we start, we are going to start in a basic way and then build up as we go throughout the video. Please do click subscribe and ring the bell if you are new here. I go live up to 10 hours a day and I aim to be the most honest channel on YouTube TV. Everything you see here is my own opinions and based upon facts. Numbers run through our most advanced software and systems. It's a completely unbiased real view. I'm not sponsored by anyone to say anything. I believe what I'm saying. It's looking at the numbers and everything for you in the most advanced way possible. I'm not here to sell videos even though I'm on YouTube and many other platforms. I'm here to build an audience to be known as the most honest person on YouTube TV. That's what I want more than anything else. So without further ado, let's get straight into the stock. Let's start with the simple stuff, and as we go down, we shall get more and more into the stock. So first of all, you can see Nikola on the screen. If we look at it over the recent chart, you can see it did peak around $65, and now we're looking at $1.08, 96%. Does that mean it's worth buying today? Not necessarily. We're going to find out in a minute. On the week, it's up 4%. On the day, it's down. We like to look over the 3 months. That will cover the last earnings. We will cover the earnings if one of my members should request it. Live, we will cover the earnings. Okay. All right. There is the chart in a very basic format. Let's now go into the stock and start diving down. For those of you who don't know, what is Nikola? Engages in the provision of zero emissions transportation and infrastructure solutions. It designs and manufactures battery, electric, and hydrogen electric vehicles, electric vehicle drivetrains, vehicle components, energy storage systems, and hydrogen fueling station infrastructure. Now, those of you know, I am very much into that kind of stock already. So there's a big tick straight away. EV and hydrogen is the future. Hydrogen, not so much for small cars, but for big trucks, trains, power stations. Absolutely, I believe in Plug, another one of my investments, and I am down the road in Texas, and we've got big plants opening up and should be powering towns and cities across America. So as well as big trucks like this. Anyway, it can power trucks. So anyway, let's go into the stock now in more detail as we slowly sort of edge down into the real depths of it in a minute. The CEO, Stephen J. Kursky. Now, the first thing I do when I'm researching a stock, I like to go in and find out who the CEO is, what's his experience, and you can do that. I've given you the name. I'm not going to do that right now, otherwise I'd be here for an hour. This is going to be a 15-minute video. 1,500 employees, headquartered in Arizona, US company, founded in 2015. 100% maintenance requirement if you're using margin to buy this, which means it's regarded as volatile and very high risk, hence the margin requirement. The highest is 100. The lowest is 25%. We have 25, 50, 75, 80, and 100. This is the highest risk, so it's regarded as very risky from a margin standpoint. Margin not to be confused with anything else. Market cap is a $1 billion market cap. Okay. The high today is 116. The 52-week high is 371. It's losing money. As you can see, price to earnings ratio, what you're paying or what you're going to earn, is negative 70 cents. It loses money at the moment. That's perfectly acceptable for a new company investing in infrastructure. That can be the case. However, we'll go into the reasons why in a minute and see if it's worth investing in. Low today 106 and 52-week low 52 cents. A penny stock is anything under $5. It's a penny stock under $5, and it's gone as low as 52 cents. Of course, we may have had some reverse splits here to keep it in the index. If you fall below $1 for a period of time, you could be taken off the index, and then you won't be able to trade on the main open market like this. Not good so far, but it can happen in a new stock. Dividend yield. There's no dividend yield. You're buying it to find the S-curve. The S-curve is when a company's like it is now, flattens out, goes along, and then takes off, and then flattens on the top when it saturates the market. We haven't, of course, hit the S-curve for Nikola. All we have had is an original IPO pop, which we don't get anymore because we're in a completely different climate. The next thing I like to look at, we'll come onto the news later. But this is some very basic analysis reports here. We're going to go deeper in a minute. But Morningstar has done some analysis on it. Only 12% are saying buy, hold is 75%, and sell is 12.5%. Again, that's not up to date and very accurate. It's not enough for me to buy on. I'll give you more in a minute. As you can see, the company is losing money in the current climate. That's not good. But however, new innovation does lose money. It has to. Just like when I set up my show here, I had capital expenditure to build a studio. For the first year, I worked for free. That's how it goes. The company is losing money. 15 cents a share was estimated, and it missed on earnings. This is when it lost 30 cents a share. As you can see, that is bad. It's a massive miss on earnings. Now, that's interesting because there was a limit of supply of hydrogen. Why plug power went down? It's a temporary issue. It's about to become fixed. So we know that. That's why plug is soaring now. It's oversold. Could Nikola do the same thing? It's in the similar industry. It's not the same, of course, but it relies on hydrogen supplies. So we could see a bounce if that was the reason why it was down. Again, there is some news there, correlation with plug. We'll look down in a minute and find out if that's what the case is. Okay, so but apart from that, we were actually starting to move up and potentially become profitable, have a positive cash flow. They missed. That could be something to do with the hydrogen supply. We'll come on to that. Let's look at over the last 3 months. It has declined. Nothing happened particularly on the earnings recently, though. It was declining before then, and we're going sideways now. Anyway, we're down over the last month by 12%, but nothing like plug saw. Anyway, let's go down. Next part I like to look at is who is buying the stock. This will give me sentiment. Who's buying the stock? It's worth noting who buys the stock. Thank you, Francisco R. Just became a member.
Francisco R. has become a member.
Thank you very much indeed. Many perks for you as a member. I'll bring them up to you later on at the end of this live review. I'm making this video during a live view, folks, so you can get comments on the screen. People can do all sorts because I make my videos live, so they're real, unedited, and it's the way I do things. Workhorse. I don't know much about Workhorse. Fuel Cell Energy. Neo, don't like it because it's very manipulated Chinese stock. Plug Power. I am in Plug Power. This is interesting because this is my Lucasades here. Virgin Galactic. We have the biggest support in the world for Virgin Galactic. Our channel has 95% of the retail investors in Virgin Galactic here on our channel. We know that. We've analyzed all the stocks they own. They've sent a review in for me, so I know that's a fact. So we have this audience here, so I know this audience very well. Plug Power, this is one that I am in as well. So people are looking for innovation in this company, prepared to take an element of risk, prepared to buy a company that's down. This makes sense. This is my Lucasade army here. So that tells me how it will trade. Very important knowing all this stuff, all right? Okay, now we've done that, we're going to move on to the next part. We're going to look very, very briefly at the company website. It's important to do that. We get an indication of how the company presents itself to the shareholder. That is often overlooked, but I regard that as a very, very important thing. I don't like when companies just speak to the customer, not the investor. If you don't impress the investor, why would anyone want to support you? This is the website. Over the last reviews, I've been giving ratings of about 5 out of 10. I've had a brief look earlier. This is just a skimming over the top. I've already done my research on the back end of this website. It's a very nicely well laid out website. I like it. It's important. They are giving some news here to the investor. I like it. It's showing respect to the investor and an understanding of the investor. This one, I'm giving it about 7 out of 10. It's a very nicely well laid out website. It does provide lots of information to the investor. I like it. It's a good website. It tells a story, and that's important. You are selling the story at this point. Presentation is everything. So I like it so far. Okay. Now we've talked about the stock being down. Is it down? Is it undervalued, or is it just going nowhere? Well, let's take a look at it now. Let's go over and have a look. Now then, I use multiple sources for my investments. I like to spend time making friends on the ground. Those that follow me know that I have friends in high places, people that follow me on Instagram, people that follow me on X. I speak to people at the company. I like to get to know the CEOs. I invite everybody that I invest in on the show, and I hope to have some CEOs join me on my show shortly, and so on. So part of my investment strategy is getting to know people. So if you follow me, links below, above my head, and in the description, you can find all of my links to my social media, X, Instagram, and you can see all the conversations that I share on my social media. But now we're going to go into another part. This is another bit of resources I use. I use Alpha. Now, this is some of the most advanced algorithmic software available, better than any other platform I've ever seen, and I've used them all, tried them all. And this is what I use. And if you watch to the end of the video, I will give you a link. My members can get a free plan of this, so they can use limited services here. And my members will also get a 10% discount, life discount, which makes my membership free as a bronze member with the discount that you'll get on this service. So that's very, very good. I'm always bringing my members the very best service. It pays you to be a member 10 times over, which is why 98% of my live viewers are actually members. No surprise, really. Okay, let's look in Alpha and let's see how this stacks up. Okay, now a lot of people get excited when they look at intrinsic values. You have to know how to read it. You look at it and it will go undervalued, so you buy it. There's more to it than that, because there's a thing called a a valuation trap, and you could end up looking at a stock, finding it's undervalued on paper, that is, using the algorithm, and then end up. Thank you very much, Colin, for becoming a member.
Has become a member.
Thank you. I'll give you all your membership perks at the end of this video. You could find that it's undervalued, but actually it's not good value. Undervalue is certain metrics. We plug in all sorts of things like the balance sheet, the revenue, the margins, all these things to present a base case, a best case, and a worst case, and it can give you a valuation. Anyway, best case, we're certainly not in that territory right now. If everything in the world was great, low inflation, interest rates were low, we didn't have macro conditions, supply shortages, we've got hydrogen issues, we've got wars going on. We're not in a best case, so we can't account for 71%. Base case. Now things changed very differently. Overvaluation by 9%. Worst case, overvaluation 100%. So straight away you can see it changes dramatically from base or worst to best, dramatically. And these figures are extremely reliable and accurate based upon everything else. You can't just use one metric, okay? So that's where we are with that. Now, Wall Street give it 106% uptake. Relative value is 59%. Intrinsic value 71% on the best case, okay? Let's have a look. Valuation history over time. Historical profit, 28% loss. Current valuation down 9%. Price and value correlation, that's between the price and the value correlation together, is 45%. So you can see how accurate that is. Value, the CAGR down 14%. Now, we are now showing potentially the best value around here. And just now you might go, well, that's obvious. The price is down. No, you could have actually had a better valuation over here if their profits, their debt situation was better. You may have had a better valuation over here just because the price is down. Remember, the price is what people are prepared to pay. It's not the value of the company. Hence why I buy Virgin Galactic. It was undervalued. The price was ridiculously cheap. The balance sheet of cash and the assets were way above what the price was. People just wasn't buying it. People were shorting it. Same as Plug in the hydrogen field. It's why I mention it here. I mentioned Virgin Galactic, of course, because it's got the same investors. I've just shown you that. So now is a good time, not necessarily the best time. Just because the price is down, it doesn't mean it's necessarily the time to buy it. Let's look at the financials. The financials is down in the last range, 45%. As we can see, if we zoom in, you can see how it's dropped from the previous range, down 45%, 31 million. Now, you can see the analysts are starting to ramp this up. This would be regarded as an S-curve if this continues. They believe it's one for the future, just like Plug, just not now, okay? Even though they trashed Plug. You cannot take analysts' information as read. They are very biased. They are sponsored very often. I am not, never will be. You cannot pay me $1 million to promote your products here on my channel. I will never, ever take it. Okay, so revenue is going down. Now, we could explain that down in a minute to the hydrogen supply. We'll come on to that if that's reported. Operating income down 722 million. 0.6% off. Net income is down 1 billion. That's down 22%. Okay. Operating cash flow. You can see yourself all these numbers. You can go into further detail if you use my software. All of these metrics will open up and give you more information of precise dates and information. And I'll give you the link at the end, and you can get a free access to my software here, or you can get a lifelong discount with my membership, and you'll never get a better deal than that. Bloomberg don't offer it. CNBC don't offer it. Mad Money, none of those people or those industries offer the discount that I get. I give you the best discount anywhere. Right, the balance sheet. Very important. One of the most important metrics is the balance sheet. we got 1.1 billion of assets and 545 million. That's okay. Nothing too bad there. We looked at a stock this morning when the liabilities were way above the assets. You never want to be buying a stock like that. I think it was AMC. No surprise. It's a meme. It's pumped by people like Matt Kors who just want to make themselves money. It's a load of rubbish. This company isn't rubbish. It's not a scam like AMC or Mullen or anything like that. But it is on the balance sheet is okay. If we look at the liabilities, we're looking for long-term debt. 232 million current interest rates. That's scary, but we know rates are going to come down, I believe, in the spring and the summer. If it can survive, things are only going to get better. So the balance sheet isn't too bad. It's got debt, but it's manageable. Most businesses have debt. Apple has debt, and you wouldn't be concerned about buying Apple, would you? Not perhaps at today's prices, but you know what I mean. Right, efficiency. Now, this is important. You can see the margins are falling off a cliff right now in the wrong way. Margins is where a company can be taken over and competition can take over, because if you've got narrow margins or negative margins, you're not making any profit, things aren't looking good, you're going to go out of business eventually. If you've got a reasonable margin but it's a small margin, every industry is different. Software has massive, huge margins, whereas other things like food has much smaller margins, for example. So you can't compare one business to another. You have to compare the sector, which again, I can provide you links to that on this service here. All in one place. You don't need to go to 20 different platforms. It's all here. So the margins are obviously losing money and they're getting worse. So that's not good. The operating margin is also getting worse. Net margins are getting worse. Nothing great so far, unless you believe that this company can survive and do well. Now, one of the most important things is what we move on to now, the profitability score. Now, profitability, we've got most things here okay. Exceptional 3 years revenue growth. ROIC is increasing, but the negative 1 year revenue growth is down. Profitability score is 21. Now, we've not really had much worse than that. It doesn't really go any lower than that. In fact, I don't think I've seen under 20. So profitability score is terrible. It's in the red. However, a new company who are spending on capital investments can be down when they first start a company. I worked for free when I first built this company, and one night in Vegas worked for a couple of years, my theatre tours, without making money because I was spending on capital investment, buying equipment. This company are doing that. However, if our insolvency score is low as well, then we have a very short runway before we go bankrupt. Okay, let's have a look. The solvency score, they've got a little bit of a runway here. They're not green. We're not up in the 80s and the 90s like Apple and Amazon, but we have a runway. We are amber. We're not red. We're not going bankrupt anytime soon. So let no one tell you it's going bankrupt anytime soon. That's because they have enough cash on the books to take them through and get through and maybe another year and a half, looking at the balance sheet from the amount that they're spending. So that's okay. You don't expect great solvency if you're losing money. It's not going to be bright green, but it's not red either. So that's okay. Wall Street, they're giving it... this is the targets they're giving it. On an average, 106 upside. Sounds good. On a best, which we're not, 388. However, we're giving it a 6% downside on the worst case. Well, 6% downside, if you believe in a high growth potential like this, then that's not too bad. That would be called what I would regard as a moon bag. Worst case scenario, 6% downside. I could live with that if I've made a lot of money somewhere else and I want to have hydrogen in my portfolio. I could probably live with a small allocation. Let's say I've got $1,000 to invest. I can spend 50% on the S&P, solid growth, something with a good return that's got a good balance sheet like Tesla, and then I maybe move 5% into Nikola because I can afford that because I know I'm going to make it on the other assets I've got. So maybe 6% downside, worst case scenario. Now, of course, that's only an expectation. Doesn't mean that's your guaranteed minimum worst. You know, that doesn't actually mean that. Anyway, Who's its competition? Competitive landscape. We'll look at Caterpillar, Cummins, and you can go down the whole list here. I don't know if it's really competition. It's something very different, but it's in the same industry perhaps. Again, you can go into more detail with my link to do that. Ownership, who's buying it? Who's selling it on the inside? Well, the latest was September the 6th was the last transaction by an insider. The chief financial officer, he sold $7,500 worth of Nikola. Let's be absolutely clear. $7,500 is nothing to the CFO. Primarily, that would be tax. Automatic transaction would not mean anything negative at all. No one's particularly buying it right now, but remember, if we are investors, we want to buy it before the insiders are buying it. We want to buy it before, but that hasn't happened yet. We want to find out what's about to make them buy on the inside. We want to be in there first. Exactly why I bought Plug the other day, and Virgin Galactic and others. But as you can see, we've had in the last 9 to 12 months some inside selling, but nothing of any significance recently. So the people that work at the company are not put off by the selling that has happened, or the share price reduction that's happened. That's quite good. Now then, what we need to look at with the share price so low, is there any short interest on the stock? This gets updated monthly. This is not a daily number, so you have to bear that in mind. Now, what are we looking at? We're looking at the percentage of shares shorted is 18.66. We were at 24% the other day with Virgin Galactic, and I said a short squeeze on the cards. Does that mean 20% is a short squeeze? 20% is regarded as excessive. Does it mean a short squeeze? No. There are many other metrics why I declared a short squeeze on Virgin Galactic. Many other things. It's all to do with the volume. There's many other metrics we have to look at, not just the sentiment around the stock, which we'll come on to in a second. But 18% is high. When you look at things like Apple, you're looking at less than 1% or whatever, to give you an example. Don't quote me on that, but it's around that sort of number. So 18.6 is high, but it's not about to start a short squeeze. But it shows you that the stock is being driven down at the moment to an excessive point. All right? That gives you an idea. Now then, we do have a little bit of news. I checked it earlier that it's of some relevance, so I'm going to have a little listen in here and play you a little bit of the news here and see what you make of this. Let's have a quick listen. This was about a couple of months ago, but still relevant today. That's why I'm going to use it. Here we go.
Shares closing the day deep in the red after the EV maker said its 2023 deliveries will be at risk. This following an investigation into battery packs that led to a recall of over 200 trucks. You're looking at the stock down, finishing the day down about 23%. Nikola also announced a $323 million.
Let's address that. New technology, when it faces recoils, recall, not recoils. We're not buying a bed. Recalls is never good. However, companies have recalls all the time. Ford, been around 100 years and more, still have recalls. It happens. It's okay. But on a new innovative stock, it does create bad news, bad sentiment. It doesn't necessarily mean it's bad. It can be expensive for a company with debt, but it doesn't mean the end of the company.
Convertible bond deal. So that's kind of the opposite of what we're seeing in terms of just stock market action. I mean, Nikola is having a very bad day today.
And I would mention too, Nikola, their deliveries are in the hundreds, and we're talking about for the full year. This is still a smallish company. Let's go to the White.
And we do need to address that. Every company, once upon a time, was a small company. Tesla once had a Roadster. There was one. Don't be put off by that. That's when you do invest, but you have to make sure the balance sheet, the numbers, the run, the burn rate, all the other things that we've covered so far in this video are giving you ticks. If you've got ticks with all those things, then that's not a problem. That's what investing is. Investing is digging the ditches, finding a new company that's new and brand new, or an established company that's beaten up that can now accelerate. So nothing wrong with that. That's what investing is. It's not investing today to buy Apple at all-time highs when everybody's buying it, when everyone's buying everything. That's just gambling because it's a great company and you got people that don't know what they're doing, just going, well, I've set up a new portfolio today. What should I buy, Mum? Well, buy Apple. Apple's a great company. That's not investing. That's following a lemming. Time to buy Apple was 20 years ago. Well, this could be the thing of the future. That's what we're looking at as investors. Nothing wrong with they've only got a few vehicles.
Wi-Fi Interactive, just want to show one brief chart, maybe two. This is over the last 3 months, and there was huge short interest when we saw this rise to above $3 a share. You can still see they're more than 99% up. That means they've...
And again, the sort of people that make these videos, Jim Cramer's one of the worst, Bloomberg is terrible, CNBC, they're all trying to sell news. I don't try to sell videos. Of course, I'd love you to watch my videos, but it's not about that. I am building, that's why everyone's a member, 98% of members, way more than those channels. Way more. I've got a higher membership ratio than Mr. Beast because I am not sponsored by any of the stocks. I am never going to tell you things like what he said there, massive short interest. There isn't massive short interest at all. It's excessive, but massive short interest when you're trying to sell the narrative that it's all being destroyed by short sellers is when we are way above 20%. So again, it sounds dramatic. They like to sell the news. It's not what I'm doing here. We're trying to give you the facts.
Doubled over the 3 months, but let's take a look at the year to date. This stock was feeling no love in the early part of the year when mega caps were surging. It wasn't until June when we saw industrials and all these other parts of the market come in. That's when we saw short interest rise, and then we saw that bubble pop. So it's just kind of more of the same for this very small market cap company.
Well, there we go. That's their opinion. They're entitled to their opinion, but to say it's massive short selling is not true. It's very weak and not relevant at all. Anyway, let's go a week ago. We have some news here before we come on to the sentiment and the back test, which is most important. Nikola reported a wider loss in the third quarter after suspending sales and recalling its battery electric trucks. I just spoke to you about that. It's okay for an established company like Ford. Mind you, Ford is a rubbish investment, doesn't make any money, so not necessarily a good comparison. However, a company that is struggling with debt doesn't want extra expensive as recalling their vehicles. However, despite the negative financial result, the company stock rallied on upbeat comments from the CEO. Remember when we cover the earnings, very, very important to know. People get very excited by the numbers. They don't listen to the earnings. That's why I cover the earnings. That's why I sit through 2 or 3 hours sometimes of earnings. I want to hear the guidance. I want to hear the human voice of the sentiment of where the company is going. It's why I bought FFIE yesterday, because I felt listening to their language, I thought there was something in that. That's what I'm looking for. The relationships on the ground. The CEO is comments from the CEO, Steve Gursky. Additionally, Nikola has seen strong demand for its zero-emission trucks with numerous purchase orders and none binding orders received. The company is also making efforts to address the recall issue and has increased its cash position. It's not going bust anytime soon. It can fix this. I am not concerned about that. So, like I've just said, the balance sheet, the runway is okay. The recall is just a reason for everyone to dump the stock, just like they did with Plug a week ago. And look what happened with Plug. Just like they did with Virgin Galactic. And now look at Virgin Galactic. If you want to behave like Warren Buffett, it takes discipline, structure, work, commitment, and research. I'm doing that for you. That's what this is all about. Craig just said, if Church heard that, well, if Church heard that, he would have to take it because it's the fact, right? And Craig, you know it. We're talking about the Ford sentiment. Right. 2 last things to look at. 90 days. The news that we've gathered, all the news, the positive, the neutral and negative, it gives us a sentiment of how the stock will trade. Over 90 days, 27% was negative. Over 30 days, it shrunk to 13%. More neutral. We want green news. We want exciting news. However, if we get great news, the stock is already pumped and it's too late. You've got to find the news before it's the news, right? Hence what this is for, this service. Over the last 7 days, things have increased. Well, we know that because we've just heard about the recalls. But about today, how is the market accepting it today? No bad news today. No good news, just neutral. What can we learn from that? Not a great deal, to be honest. There's nothing great going on at the moment. That's what we want, because we want to find the good news before it's the good news. I think their cash flow, they can fix this problem. I think there is a future for it. We know that Plug is doing really well. Plug is a hydrogen business. They're exploding today. They went down on the bad news. They popped up. So if you're looking for some high risk to 10x, this could be. It's got a good balance sheet. It can turn profitable again when we get the current issue out the way. That's not a major issue. That's a temporary issue. So we like that. So if you are looking for a high risk, and I have high risk in my portfolio, I can't have high risk 80%. I've got J&J, Coca-Cola underpin my portfolio. I've got some high risk Tesla. I don't regard Tesla as high risk anymore, but I've got Virgin Galactic, I've got Plug, and I've got FFIE today. Got some very high risk there, but it's a percentage that's manageable. And if it all went to zero, my portfolio would still be fine. Nikola could be one for you if you don't have those things, and it's got the same sort of investor, so it gives you the same sentiment. Okay, there we go. Let's look now further. What do we have? We've covered the news. We've covered all of that. Okay, we'll now move over to the last part of this puzzle. Before we give you the links, if you should wish to get all of my software, you can. The last thing I want to share with you is the back test. Now, it's very, very important to do this. Again, take some discipline and time. It's not always rock and roll and sexy, but it's important. So I've just put $10,000 in Nikola, $10,000 in the S&P, run it through my software, and it produces a back test for you. So you can compare, if you'd invested in the S&P compared to Nikola, where would you be? Right? Well, we all know the answer to this, but nevertheless, we are going to look at it. We need to understand. Nikola, if we'd put in 2019, last 4 years then, you can see Nikola would be down from $10,000 to $1,113. We'd have lost 90% of our money. That's marked in blue. We can look at the S&P, however. 10,000 would have returned us 18,000. We'd have nearly doubled our money. So you can see that's represented in red. So if now you are thinking, okay, the cash flow's okay, the burn rate's okay, it's a temporary issue perhaps with the recalls. That's the only reason why it's dropped recently. We can live with that. Can they fix that? I would say they could. We know hydrogen is doing well today. Plug got sold off for the same thing. It got sold off because of hydrogen limitations. They told you there's no issue, but everybody dumped the stock because Wall Street don't like innovation. They don't like Tesla. They don't like Virgin Galactic. They don't like hydrogen. They don't like solar. Why? Because they can't quantify it, and they're just traders, not investors. They're analysts who get sponsored to say all sorts of things. A lot of it's corrupt. Wall Street is a very dirty business. This is supposed to bring you the honest information. So I'd say Nikola are okay. I would say Nikola would belong in my portfolio as a high risk element, 5% of my portfolio. I could buy it, but I'm already in other things in a similar field, so I'm not buying it today. It would unbalance my portfolio. If we look at Nikola's chart there, if you're going to buy it, now we've covered everything else. Look at what happened here, what news happened here, and you can find that on the investment website, certain dates, reports, what news occurred here and what news occurred here to drive it down. If you can answer that question and feel comfortable with the answer, then perhaps for you, Nikola is actually worth an investment as a limited part of your portfolio. So there we go. There is my review on Nikola. I hope that was of some help. If you like my reviews, Alpha, which is regarded now one of the best, most advanced algorithmic platforms all in one place, they like what I do because they actually put my reviews now on all of their stocks. If I give you a quick example, if we go to SPCE, just one of many now, I've done many. If I scroll to the bottom of SPCE, just for a moment, you will see underneath the software and the technology, they use my reviews and they put them above CNBC, Bloomberg, Yahoo, and so on and so forth. There are my reviews. As you can see, I cover the earnings and the news and so on and so forth. All right. So if you want to get this software, my members will basically get my membership for free because the discount that you'll get here will wipe out my membership, and that's one of many things which makes my membership the best value. I'm trying to provide the best value, the best service for my viewers. Click above my head for all the links, my social media, my newsletter, all of it, all down in the description of the video. You can get the link for Alpha Spread. If you want it, you can get a lifetime discount, or you can set up a free program using my referral. Whichever way you like, you'll get the best deal with me because I'm here to help people. That's it. Over here, you'll find more reviews in the series, in the playlist, more Nikola. If it comes out, I'll post over here, and all the rest of it. That's it from me. Thank you very much indeed. I hope you enjoyed this review. Did you tap the like button and share it out to more people? If so, I'll see you back on another live show. Until next time, as always, take care of yourselves and each other.